Hello, this is Brandon Chapman with the video for TheoTrade on June 5th, 2023. Apple tests all new all-time high and fades, right? So today, for example, the title session, Bearish Vision as Apple tests all-time high. As we look at the S&P, Apple being a major contributor to the S&P 500, you'll see the S&P, the futures are down 0.17% today. If we look at the SPY, the ETF, we're down 0.19% today. Sectors that are leading are utilities and healthcare, cyclicals, communications, and notice where technology falls. This was a big day for Apple. They announced a new 15-inch MacBook Air, new iOS 17, and especially their first new product category in 8 years in the Vision Pro. And boy, you look at the vision that we're seeing here, it's definitely kind of a bearish vision. As you notice, we saw steeper declines, basically a trend down portion of the day of lower highs and lower lows as every rally was sold, and the stock rolled down towards about 179 before lifting before the close. This does represent a new all-time high. Go back, 3 years on, we'll go weekly here. You'll notice that this is a new all-time high for Apple. The first is really since, again, going back to January 3rd of 2022-ish, around that area. And so, we have a new all-time high. Where does it go from here, right? We're going to take a look at valuation. We're going to look at some of the other information on Apple and make an assessment and maybe find the periphery opportunity, possibly in a stock like Unity. That saw significant call option activity today. We'll look at RIG, GM, KeyBank, Coin, and also XLV, as maybe the healthcare sector's beginning to heat up here just a little bit as the market's beginning to make possibly a bearish turn away from its highs. So as we go back to the SPY, what you'll notice is that, again, we're testing 430, 4,300. This is the high that we had from August of last year. And again, it's important to kind of gain a perspective of how are we treating this breakout that's been certainly contributed to by NVIDIA and Amazon and all these big names? How are we treating today specifically? Well, if we go and look at the VIX, what you'll notice, those last couple of days where the S&P made a big move, accompanied a rather sharp decline in the VIX, which, if you go back here a little ways, this is the lowest VIX that we've had since when? Since around June of 2021. So we have a low VIX, we have a high market. How much more can we squeeze out of this? And this is where I like to look at the term structure, the 3-month VIX against the VIX. And what you'll notice, if we bring up a ratio of these two products, we get a sense of how high the VIX is, how high the 3-month VIX is relative to the 1-month VIX. Notice that we're currently about 1.21. This has been a condition we've been in since April 19th. And if you look at the market over the last number of weeks, 6 weeks ago, we're up 3.6%. 3 weeks ago, we're up 3.7%. A week ago, 1.69%. And today, obviously, we're down 0.19%. What does this show? Really, the market is flagging at a point where the VIX is telling us to be cautious. And on part of that, too, we see a higher expectation of future volatility. We also see tail risk more prevalent. This hasn't been published for today yet. But the skew as of Friday finished at 142. Anything north of 130 is fairly high. We had a couple of higher points up here, almost 160. What this reflects is there's a high degree of hedging going on. What does that mean? Selling calls and buying puts. Again, kind of like a collar type strategy. So the point is there's tremendous hedging happening right now as the market is testing highs and companies like Apple are testing all-time highs. So where is Apple inclined to go from here? I mean, if we look at the stock technically, significant amount of selling happened intraday as volume surged to over 120 million shares, 121 million. Now let's take a look at where Apple stands in terms of its earnings. So let's look at the breakdown. So we go to the Analyze tab here on Apple, scroll down here, and this breaks down again the different product categories. So for example, the iPad, the Mac, the Apple Watch. Apple Watch, after several years, is now amounting to 12.5%. It's been services that ultimately Apple's been relying on. as they've not been willing to reflect the number of units being sold for iPhones. And so as we look at the breakdown here, how many units are they going to sell of a $34.99 product for a mixed reality headset where you can kind of see through it? It's not like like an Oculus, for example, or a Meta, where it's you can't see through it. Apparently, this you can. Is it worth $34.99? And so I thinking about as I read about this today, the skyscraper index, right? The skyscraper index is basically saying we're looking at the number of skyscrapers being produced as kind of the world's tallest buildings have risen on the eve of economic downturns, basically saying what? You see a sudden increase in the number of skyscrapers being built just prior to an economic downturn. Is this kind of Vision Pro headset, and I keep forgetting the name of it, but anyway, yeah, it's called Vision Pro. Apple's Vision Pro headset. Is this the new skyscraper? Is this finally the technology piece that's going to be launched that represents the end of consumer spending, or is timing aligning with the end of significant consumer spending? If we take a look at a few things in terms of earnings, so basically the entire S&P 500 has reported, and as we look at earnings for the first quarter, and we've seen now 2 negative quarters in a row. The most recent quarter down 3.7% and expected to be down for the next 2 quarters based on analyst estimates, as revenues are 4.4% higher. Now, last quarter was not nearly as bad as people anticipated or analysts had anticipated. 78% of companies beat estimates. That's fairly high. Normally it's around 74 points. It's about 74% of companies beat on revenues, which is way, way high relative to the past. Normally you're looking about 60+% companies beating on revenues. But when you look at technology specifically, technology earnings were down 11.7%. It's not exactly like technology's doing phenomenally well. Yes, there are your kind of anomalies like an NVIDIA, for example. As you look at their earnings, $1.09. Well, what was their earnings in the same quarter a year ago? Non-GAAP earnings. Well, guess what? It was $1.36. So we're looking at earnings regarding NVIDIA down rather sharply, almost down 30% from the same quarter a year ago, and yet the company is trading at a significantly higher price. Let's look at Apple as an example, right? Apple right now produced $1.52 in earnings. They made $1.52 last year. So I guess we're looking at, this is what you've done for me lately, but what are you about to do for me? And this is where analyst estimates start to come in. And as we look at Apple as an example, we look at, again, made $611 last year, expected to make $597 this year, maybe bouncing back a little bit to $656 next year. That only represents about a 45-cent increase off of $611. It's not like this is extraordinary growth that's being produced by Apple. Revenues are expected to decline 2.5% this year, expected to increase 6.5% next year. Again, look at the sales, right? 394 to 409. That's a 2-year result there, only up about $15 billion, or roughly 5%. Apple normally has a very good track record of beating analyst estimates, but look at this again, 597. There have been no meaningful revisions in the last 90 days on Apple for both the current year and the next year declining by about 4 cents. And you look at a 5-year projected growth rate for earnings, it's 8%. Now, is the launch here going to tell us that the Vision Pro, the bigger MacBook Air, iOS 17, is this going to really reshape Apple and cause significant positive revisions? I find it hard to think it's going to be extremely meaningful to the bottom line in Apple. And so as a result, we have a company testing an all-time high with stagnant to declining earnings and no real respite projected right now by analysts for the foreseeable future. So how in the world can Apple maintain its high up here at 182, closing at 179.58? Let's take another angle here. So let's take a look at valuation. I'm going to use a site here again. I'm just going to use the free, the free version of it. I'm going to take a look so we can see historical valuations here. We know this company has, in terms of Apple, this company has phenomenal margins if it can generate the revenue growth. So again, net margin is 24%. But if we look down here at valuations, right? P ratio 30 times, that's double what it normally is. Forward P ratio 27. Trading at a value, that'd be closer to 15. On the high side would be 20. Price to sales ratio. How is a company, the biggest market cap company in the world, trading at 7.5 times sales? And we just look forward 2 years in terms of projected sales, and this is not going to materially change. Price to book value ratio, 45 times. Well, guess what? Apple's taken on significantly more debt relative to its cash. Its cash is down. Its debt's up here at close to $120 billion. Its cash is down at 40. Now, you might say, well, they've got long-term investments and other things that amount to more than that, but this still is a change over the last number of years since 2019 as their cash has continued to decline while debt levels have either grown or remained similar to the past. And so we look at the valuation. This creates significant concern at the present level. Can they really move the needle and really continue to maintain these fantastic margins? Well, yeah, that's a possibility. But can they grow the top line in terms of revenue? And right now, that's not something analysts are projecting. Is it wildly overvalued? In some respects, no. But is it trading at a discount right now? Not exactly. And that's the quandary we have right now. If we are starting to burgeon or enter a period of recession, how does this break for Apple at the moment? At least at this time, this is kind of a projection I set off this initial rally here. The idea is, could we get to 261? It's going to take some significant effort and positive revisions to really continue to drive this product. And so where are they? Where are these positive revisions that are going to say, hey, and today's reception at a minimum kind of reflected some skepticism over Apple's new products and improvements to some of their existing products and operating system that are going to drive them there. So the effort here is to probably look at Apple seeing some sort of retracement. And if we look at kind of the trend here, I'm going to draw a Fibonacci retracement. Could we see a 170 to 160 Apple? Absolutely. We could see a much, much lower value if we start to see traction on the recessionary side of it, which currently is not being really projected or priced into Apple's earnings. And so again, if we start to see even the most optimistic estimates pricing Apple at 180, if we start to see a little bit of pessimism enter into the market, and boy, we have a debt ceiling that now is opening the spigots in terms of debt through 2025. Tax receipts this year are down. We may see a voracious appetite on the part of the federal government to raise debt, maybe $1 trillion in the next couple of months here. And what does that do for money that's available for investment in stocks like Apple, among others? This does create some concern right now. And certainly as we looked at the VIX measures, we're pricing in the potential downside in the market. So as we're squeezing out some gains here, again, today we're down 0.19%, but we're just barely squeezing out less than 1% moves in the SPY or S&P 500. And we're testing a pretty major resistance here, 4,300 or 4,430 on the SPY. And we're starting to see the potential downside open. And again, these volatility conditions have existed since April 19th. And just look at how much the market's been able to eke out over that period of time as these volatility measures have been pricing in significant potential downside. And that 3-month to 1-month VIX above 1.2 is skew where it's at. We're probably looking at a 5 to 10% correction off of our current level. And boy, a 10% correction gets you back to 390, in kind of in the middle here, 20 points to the downside. Can we get to 410, 405 in this range, getting back to these points? So I think there is some trepidation right now. It's hard to really want to be significantly long the market. And those that there was a decent amount of the last couple of days option activity, expecting today's result probably to be different than it actually produced. And so now all of a sudden we're seeing the reversal. Now for companies in the periphery, like a Unity software that's kind of part of this Vision Pro, did fade from our highs, does have resistance at around 33. There was some rather significant option trades in this one. A 9 June at the 40 strike. Well, we touched 40 today before backing off. but by January, let me double make sure. I wrote it down, but may not. Yeah, but by January, looking at here, long the 90, short the 100, a long call vertical out here at 9100. And so it's possible, right, for a company or a stock like Unity, where these incremental sales could have dramatically more positive effect. Could this 9100 long call vertical out here maybe give us an indication where things may be going for Unity? Well, look at where Unity is right now, right? If we look at, and this was kind of a projected level I had off the initial selling back here. Let me just remove that drawing and draw it as a retracement. And you start to look here at 1/3 retracement has you at 100. So all this kind of long drought this company's had, yesterday's breakout's significant, but in the bigger picture, again, if the Apple Vision Pro turns into anything, maybe there is an opportunity for this stock to experience significant upside here in the coming months as we approach the end of the year here. So we'll see what happens, but this certainly may, if you like the idea of their product, this might be the better way to go. Possibly looking for a retest of 33 or a breakout of 42, with the next target level being around 60. But again, that 90-100 vertical for January certainly looks interesting as a very speculative, low probability trade. If you're laying it out there saying, hey, I'm willing to risk, how much is that? I'm willing to risk here about 22 cents or something to see if this thing can get up here. And if it can, we're looking at upwards of $10 of upside for 20 cents or $20 of risk, $1,000 of upside. So, something to consider. Again, unlikely that pays out, but again, you could select something a little bit lower. But I thought it was interesting as a way to play Apple. That's something, a company that's very, very overvalued. Unity may very likely be overvalued given its historical earnings. But this is a new scenario that if we have a new product that's incorporating their product, again, maybe there is some significant upside here. As we kind of wrap things up, let's look at the periphery of other names that are moving. If you look at what's happened with the oil industry, so for example, oil today /CL did take it on the nose as we gapped up on news of production cuts out of OPEC and maybe even more from Saudi Arabia. Again, it's not exactly bearish for oil prices, and yet the oil prices gapped up over the weekend. We're selling off today, and as we look at rig, one thing we have seen is the rig count in the United States has declined. So oil service companies that depend on the rig count. Well, today on rig specifically, this was a weekly option here for the 9 June. Puts being bought here at the 650 strike. So again, are we starting to see a little bit over our skis at the moment? Today is kind of bearish cloud cover, looking for this to retest 570 again, maybe looking for some near-term pullback in rig. Now, could you buy a 7 and sell a 6 for this week? Yeah, you could potentially realize that if we drop towards the lows, it's about a 1-to-1, 50-50 probability of that happening. GM's had a phenomenal couple of days, or last week, or a couple of days rather, as we test our highs up here. Today we're kind of sticking, right? Today we gapped up, we faded. We were a little bit down more. We came off the lows here. You could look for a trade through today's low as a trigger, but there is bearish interest entering GM today. On this week's activity, 33.32. So it kind of rallied, pushed it a little bit further out of the money. But again, right now we're talking about, less than 10 cents. You could even just buy the put or give yourself just a little bit more time. What about if you give yourself 25 days, right? Buy the 33 and sell the 31. Doesn't make as much profit if we drop there quickly, but it gives you more time, 25 days to retest the lows. And again, the difference there's about 43 cents on a 2-point spread, risking 43 to make $1.57. Not terrible. We just need this thing to retest 32 down here. So I thought this was a good setup, aligning with some unusual option activity. Some of the news coming from the banking space requiring banks to raise reserves. At the same time, the federal government is issuing debt. They're siphoning off a lot of money out of the system. Banks need up reserves potentially. We're seeing the Fed, are they going to raise rates? Right now, 70% chance they don't. Is it next week? Yeah, it's around the 13th. I guess it is next week. um, we could see a significant drain in capital in the coming months. What does that mean for companies like KeyBank that now are forced in a position to maybe have to raise more capital to remain viable? So again, we're kind of at resistance here. Near-term supports 880. We could be looking at much lower prices here. This is kind of our seed wave down. The 161 was hit. The next trend down in the next leg down, the trend would have 740 to 650 as a trend target. As we look at the option activity today in KeyBank specifically, this is a June expiration of the $10 strike price, mostly bought. And so again, we're seeing kind of a trigger level at 10. So you might look for a trade through today's low as a trigger, but possibly aim for 650 to 741, recognizing there is some near-term support at 880, but this is a bearish setup here. With the announcement of some allegations against Binance, Coinbase sold off today, came off the lows at the end of the session, but the reality is, what use are these companies in the bigger space? Peer-to-peer is probably the safest way to go. So why house your money with companies like Coinbase or Binance or whatever? Maybe temporarily, as maybe if the facilitating the exchange from one crypto to the other. But today there was significant bearish option activity on Coinbase across a number of strike prices. And one in particular, we look at the June 9, was the 50 strike out here. 50 strike, way out of the money out here, 26,000 contracts. And 50 does not look as far away as it may seem. And again, do you have to get it this week? No. You could give yourself a little bit more time, not just 4 days, maybe not even 11. Could you go 25 days? Could you go 46 days out here? Buying the 55, selling the 50. Well, it costs you $2. The skew is favorable for that kind of trade. You have upside at $3 if we get there. And again, maybe try to make 50, 60% off of a downside move as the stock approaches 50 here. So again, Coinbase seeing some downside. Again, you could wait for a retest of the highs again. Might be even a better opportunity for like a 70, 65, 65, 60. Or again, you play it here, willing to weather the kind of the jarring effect the stock may have in lieu of it going to 50 in the coming weeks. And finally, we're going to look at XLV. So XLV today had a nice little pop over the last several days. Now, this is only getting us, if we look at the retracement here, to about a 50% retracement. The question is this the beginning of a bigger breakout in XLV? And if we look at today's trade, it certainly kind of gives us that indication. This is a 15 SEP expiration. You look out here on the call side, 4,800 contracts at the 143 strike. Now, again, this also combines with some option activity on Monday in MDT. Again, we got some headwinds ahead. They're obviously going bullish at this stage where the market is. If it's going to decline, is more difficult. You could look for a pullback and a retest of the lows on MDT. CNC is a stock that I frequently look at when we start to see rise in unemployment, as they do a lot of Medicaid and other governmental, sponsor programs like CHIP, et cetera. More unemployed people may lead to more subscribers. And again, a break of 70, possibly a retest of 62. This stock may have room to run. So within healthcare, those are a couple of interesting stocks. And today also DOCS. This is a platform, but in the medical space, gap, we're kind of faded back here off the highs. Not exactly a bullish finish. You might want to look to see it trade through the high, but it was a June 37.50. So again, we're nearing some of these targets right now with healthcare. Again, may need a little bit of a reset. This is one area to begin to look at based on option activity over the last couple of days. Anyway, folks, that's all we got for today. Catch you back.